Hello, everybody, and a very warm welcome to the Responsible Banking Principles webinar, hosted by Datamaran, UNEP and NSFM, with a special guest from BBVA joining us on the panel. My name is Martina McPherson. I'm the president of the Network for Sustainable Financial Markets, a global industry/academic network for sustainable finance and banking experts, and the founder of SI Partners Limited, a sustainable investment advisory firm. I'm very much delighted to co-host today's session. And on the panel with me are Simon Detling from UNEP, Suzanne Katus from Datamaran, and Tony Balabriga from BBVA. For the next 60 minutes, we will discuss the content, details, and developments around the responsible banking principles. Just for your information, the consultation by UNEP was recently launched. I was delighted to be part of this at the Climate Finance Summit in Paris in November 2018. A few logistical notes up front for all of you that are just logging in for the first time and hopefully remain with us for the next 60 minutes. This webinar is being recorded. It will be sent out to all participants and freely available. Handles for social media are at Datamaran AI, at BBVA, at UNEP_/FI, and at MN_McPherson. Due to the large number of attendees, your voices will be automatically muted. To ask questions or engage with us, and later on in the interactive Q&A, please use the chat box. If you need to have help with Zoom, please just contact the marketing team at Datamaran. For the next 60 minutes, we have a fully packed agenda. I'm kicking off with a couple of context notes on sustainable finance and investment, then followed by Simone, who will set the scene and talk in detail about the UNEP responsible banking principles. And then we will use the remainder of today's session for a very interactive discussion chaired by myself, which also involves Suzanne Katus from Datamaran and Tony Balabriga from BBVA. The last 10 minutes, we will actually involve the audience, you, to get into an interactive discussion with us. Again, please use the chat box. I would like to start the session now with moving to one of my first slides, talking about the interconnectedness of ESG issues. Sustainable investment and finance have certainly gained momentum in recent years. We have heard about various trends and developments by key influencers in the market coming out most recently, for instance, ESG trends to watch. And there's an ongoing debate about the interconnectedness of these ESG macro and micro trends in the industry and in academia. Just referring to a couple of very topical reports in this context, for instance, the World Economic Forum's risk reports, CFA's and Towers Watson's work in this area. And I'm showing you here briefly a slide. I was proactively involved with this part of a Towers Watson working group in 2017, assessing the interconnectedness of ESG issues when it comes to, for instance, pillars of society, technology, economy, environment, and interestingly, politics. And how these macro trends ultimately are influencing and shaping the micro trends that we are then seeing in investment decision making. And some of them that we had highlighted were the ongoing emerging markets convergence, socio-demographics, global connectivity, pervasive technology, and of course, the environmental, and I should also say increasingly, the socioeconomic crises we are seeing developing around the world. I would like to briefly move to the next slide to see how that actually folds into shape when we are talking about the wider context of the so-called global, or increasingly, as classified by COP24, the just transition, which interconnects the Paris Agreement and sustainable development. As you can see on this slide here, I've shaped and picked a couple of the macro trends that you had also seen on the previous slide here. In this instance, for instance, climate change in the context of climate science. I've looked at the various type of drivers in the market and how ultimately sustainability is now becoming mainstream development with more than 22 trillion US dollars within sustainable investment strategies and more than 80 trillion assigned to the responsible investment principles, hopefully banking in the future. There's also ultimately the ongoing shift that we are experiencing, that we have seen, which brings us to our 2019 outlook. And that's ultimately how we are moving from a voluntary into a mandatory landscape when it comes to ESG issues, and how regulators are ultimately stepping up in this field. Just a side note, the FCA, I've been working with them on green finance modules, teaching them and training them over 2018, have now also launched a climate change consultation, which actually runs until today, as far as I'm aware, and they talk about the impact that climate change has on financial markets. So again, a quick side note here, you might want to get engaged in that debate at the last minute and obviously follow this up. Beyond the regulators and policymakers, what we have seen clearly that companies are picking up, becoming more proactive in the context of business model transformation. And that's not just constrained to certain sectors here when we talk about energy sectors or retail and apparel. Many of the multiple ESG issues, the interconnected issues, especially environmental and social, are increasingly becoming an important part of the business transformation that organizations are undertaking from a strategic as well as from a transactional and operational perspective. And last but not least, here you see the other drivers I've highlighted again. Where the debate really started was within the investors community and group, apart from the corporate, and the investors group led by initiatives such as the PRI, the 6 Principles for Responsible Investment, launched in 2006, have now ultimately influenced the wider investment value chain through networks, coalitions, and initiatives, as well as through best practices, mandatory reporting, etc. And that has inspired and ultimately triggered off various other movements in similar sectors or associated sectors, such as insurance, and now obviously we're focusing on responsible banking. What we have seen last but not least, a lot of these developments are also supported by product innovation and technology. May they be on the upside or the downside. It's very interesting that we have obviously here with Datamaran experts on AI and ESG research technology on board, who can give us later on a bit of an insight on how much the ESG movement is now developing and depending on technology and AI development side by side. And then last but not least, of course, the countries aspects. You've seen we kickstarted many of these debates for ESG in the context of sovereign risks. We're now moving also into opportunities and into countries taking and shaping actions. And my side note here is obviously China is a prime example. Chinese green finance movement cannot be overlooked. It's ultimately been part of the success story of the Paris Agreement. And ultimately now we're looking at other nations such as Japan, etc., to make clear indicators or build clear indicators to move ahead with other areas of the ESG/SDG agenda, and other markets beyond obviously the Asian markets are already following suit. I'm just putting a few side notes here, knowing that Latin America and other markets who were not even foreseen to be on the roadmap for ESG and SDG a few years ago have obviously stepped up and are stepping in. So again, where does that leave us? Quickly, the 2019 outlook, we see clearly an alignment of objectives, ESG, sustainability, sustainable development objectives, green finance objectives across the investment value chain. We see a move from voluntary to regulatory ESG frameworks and taxonomies. And we ultimately seeing there's an interconnectedness, again, which I highlighted on the previous slide, of many of the ESG and SDG issues, which are becoming increasingly highlighted even with the now new framework around the global transition, or from the green to the global to the sustainable / just transition. And this is an ongoing trend. Without further ado, I would just like to highlight obviously that these various initiatives that have now been emerging, may they be in the investment, capital markets or insurance context, especially here in the private sector on a regulatory as well as an industry level, intend to create more sustainable financial markets. and a system that's able, hopefully, to withstand future challenges and will benefit from rising opportunities. It's interesting to see, though, that even we are making good progress when it comes to international sustainability targets, as set out by the Paris Agreement or the Sustainable Development Goals, we are still facing significant development and expansion challenges when it comes to ultimately sustainable investment and capital markets approaches across the value chain. Hence, it's so important to have more and more initiatives led by the UN here in the context of responsible banking to ensure that we have a strategic, operational, and transactional alignment for, in this case, responsible banking. And with the help of Simone Dettling, who will be taking the lead in the next few minutes, we are hoping to explore a bit more the context and developments and details around the responsible banking principles, where we stand. And Tony Balladriga from BBVA is ultimately part of the working group and will help and shape the discussion when we're going through the second part of our public Q&A session. Before I'm handing over to Simone, I would also like to briefly get you all engaged in our first poll. So that's not just me talking now. Please get involved. You can probably see the poll up on screen. And I'm just reading out the question here. Are you planning to adopt the principles in your organization? You can make various choices, yes, no. And if you have further comments, please use the chat box. Thank you very much. We are letting this run for 30 seconds and we'll have the results on screen in a moment. Thank you very much. And I think we're sharing the poll results now with everybody. So very interesting. There is in the moment a yes and potentially a not relevant, which overweighs the general debate. But that's very interesting. Thank you very much. So it gives us a good understanding as well of who is on the call and how much actually the responsible banking principles might be of relevance to them. We have a few more other polls later on, and we'll obviously utilize this information for our own research, and we'll again share that as a follow-on with this webinar recording. Thank you. Simone, without further ado, over to you, please.
Thanks very much, Martina, and that's fantastic to see. We have a few prospective endorsers here in the call. That is great. Do get in touch. We have a few, maybe not yes, but maybe we can change that with the next few presentations, Tony. And there are quite a few people who think that this is maybe not relevant for them. And maybe also that is a perception that we can change. Let's see. Before I get into the principles themselves, a very quick word on the UN Environment Finance Initiative. For those of you who are not familiar, we are a partnership between about 240 banks, insurers, and investors. And the United Nations have been one for 26 years. And this is really the largest sustainable finance partnership across all the finance industries internationally. I have had the privilege to help facilitate what these 28 banks you can see here on the screen have been developing over the course of 2018, the principles for responsible banking. We've launched them, or more specifically, the CEOs of the banks you see there have launched them on 26 November in Paris for global public consultation. So the principles are open for consultation until end of May. We are inviting comments and feedback, of course, not just from banks around the world, but also from investors, policymakers, regulators, business, civil society, etc. So that should hopefully address almost all of you in the call. Please have a look. Please provide your feedback, your knowledge, your inputs to make the principles even better. Already today, we have more than 50 banks in the initiative, and I'll get to that later, because it is possible for further banks than the 28 to join now. We're aiming to have 100 banks, a coalition of 100 banks by September, which is going to be the moment when the principles are going to be signed at United Nations headquarters in New York. So many of you might wonder now, well, why have these banks decided to develop the principles for responsible banking? And I'd ask you to go one slide back. Fantastic. No, we are at legitimacy and trust and responsibility now. Fantastic, yes. So, why? And I think Larry Fink, the CEO of BlackRock, put that quite well in one of his famous letters to CEOs around the world that he issues once a year. And he said, society is demanding that companies, both public and private, serve a social purpose. So to prosper over time, every company must not only deliver financial performance, but also show how it makes a positive contribution to society. And for banks, that's more true than ever. We are in an age of financial disintermediation, of blockchain, of technological advances. So it becomes more and more important for banks to show their value added. We are going to see the transition towards the millennial generation, for which the banks will need to compete, both in terms of workforce and in terms of future clients, and who places quite a strong emphasis on purpose. So our banks have really recognized that legitimacy and trust increasingly depend on the banking industry clearly showing its purpose, its value and contribution to society, and on it being seen as taking responsibility. So with these principles, they've really set out a vision, a clear purpose and responsibility for the banking industry to serve and to contribute to society. And so they're committing to making society's goals as they've been expressed in the Sustainable Development Goals and the Paris Climate Agreement, an integral part of their own strategic objectives and decision making. And they commit to doing so by aligning their strategy, their portfolio, their business practices with society's goals as expressed in the SDGs and the climate targets. And with all that, they do set a global benchmark for what it means to be a responsible bank. Of course, and I think I've touched upon that a little bit, strategic alignment with society's goals is not merely a question of legitimacy, trust, and responsibility. Strategic alignment with society's goals is a prerequisite for success. Society is changing, the economy is changing. We see that society's goals, as they've been expressed in the Paris Agreement, the Sustainable Development Goals, will and already do guide major changes in our economies, in our societies, and we can move to the next slide. We see that, for example, the World Economic Forum, where we presented 2 weeks ago, projects that by 2020, about $5.7 trillion will need to be invested annually in green infrastructure. Ernst & Young estimates that addressing the SDG would unlock about 12 trillion in business savings and revenues annually, create 380 million more jobs by 2030. So there is an enormous business opportunity. There are, of course, also risks. And only banks really that understand where we are headed and what risks and opportunities these changes are created, what demands they're going to be confronted with in the future, and that strategically position themselves to manage these risks, to seize these opportunities, to meet those demands by adapting their business strategies and practices, will be successful and continue to create value for shareholders and also for society. And that's really what these principles help banks do. They provide a single framework that guides banks in embedding society's goals at strategic, at portfolio, and at transaction level across all business areas. And with that, in identifying and seizing these opportunities, in meeting future demands, in adapting to a changing economic and social environment, through aligning with and contributing to society's goals for an equitable future on a healthy planet. So what do these 6 principles look like that the banks are committing to? We can move to the next slide. Principle 1, alignment. This is really the principle that sets out the objective and the vision. And that's very simply aligning banks with society's goals. And that means ensuring that banks' strategy, decision-making, and product and service offering are consistent with and contribute to achieving society's goals. And that means elevating sustainability from the transaction level, from the risk focus, where we see it very much at the moment, to the strategic level. So really making society's goals an integral part of the bank's own strategic objectives. Also, when we talk about, effective alignment, what will be required will be focus. And so banks commit already in the first principle to focus on those areas where they have their most significant impact, both positive and negative. So to really focus where it matters most. So how do banks achieve this alignment with society's goals as expressed in the SDGs and the Paris Agreement? Well, first and foremost, we need to understand and work on impact, and that brings us to principle 2 and the next slide. Because in order to understand and increase its contribution to society, a bank really needs to understand its social, its economic, and its environmental impact. And that constitutes quite a significant change in viewpoint. Because this is no longer just about what impact do developments in the world have on a bank's portfolio. This is about what impact does a bank's portfolio have on the world. And so banks commit to assess and be transparent about their impact, both positive and negative. They commit to manage significant risks to people and planet in a forward-looking manner, as has been proposed recently by the TCFD, and to continuously reduce their most significant negative impacts while scaling up their positive impacts. One example here is, of course, by shifting their portfolios from carbon-intensive to low-carbon technologies. So how can banks achieve this improvement of impact and a shift, for example, in their portfolios? And that brings us to principle 3, clients and customers, because in fact, and that's also the next slide. In fact, banks' impact is to a large extent realized through the projects, the companies, the customers they provide financing to. And so banks can really achieve their most significant contributions to society's goals by working with their customers and clients, by encouraging and incentivizing sustainable practices, by accompanying and really proactively supporting their customers and clients in their transition towards more sustainable technologies, business models, and lifestyles, by developing an offering of products and services that incentivize and enable sustainable economic activities. And with that, and I'm sure Tony will also talk about that, banks are also able to build much stronger client relationships, better able to anticipate their clients' needs, and to help, future-proof their clients and thrive together with their clients. Of course, banks on their own can only make so much progress, and that brings us to principle 4, which is on stakeholders. And with that, also the next slide. Really, for banks to understand their impact, to understand how they affect people and environment, how they can align better with society's goals, simply requires them to consult, to listen to, and engage with civil society stakeholders. To help create a more enabling environment for the economic and social changes that will be required to achieve society's goals, banks also need to work and transparently engage with policymakers and regulators. And there is also quite a case for cooperating with new partners, such as technology providers, to provide new solutions at a greater scale to challenges around sustainability. Of course, implementing these first four principles successfully and aligning a bank with society's goals will require anchoring these in day-to-day business practice, and it will also require driving ambition and continuous improvement by setting public targets. And that brings us to principle 5. Thanks. Yeah, and principle 5 is really about, how does a bank integrate its strategic objectives regarding its contribution to society's goals to become part of day-to-day decision-making across all business areas. So it's about translating these into effective governance structures, into policies. It's about defining clear roles and responsibilities. It's about assigning adequate resources. It's about incentive remuneration systems, promotion decisions that reflect sustainability-related performance. And above all, it's about fostering a culture of responsible banking. Because only really through culture change do you get into a situation where intrinsically every decision and every action of every staff is taking into account the bank's purpose and responsibilities to society. And that's really a great task that starts with concrete leadership at the top. What really distinguishes the principles for responsible banking, and I'm sure we'll get into that later in the discussion from other frameworks, is a clear mechanism to effectively drive ambition and continuous improvement, and that is target setting. Through setting public targets, banks commit themselves to a clear direction, to an ambition, and to a clear course of action towards external, but almost more importantly, towards internal stakeholders. Clear targets really ensure internal commitment, and they ensure accountability from the top level to the working level. And they trigger a collective drive to really achieve and exceed what has been promised publicly, the ambition that has been set in the public target. So all banks that sign these principles commit to set targets publicly. And these targets really need to be in the areas where the bank has the most significant impact. So once again, focusing where it matters most. And their ambition, of course, needs to be in line with or exceed the ambitions set out in the Paris Agreement or the Sustainable Development Goals or other relevant national or regional frameworks that might be most applicable to the issue at hand. Of course, target setting not only drives ambition and continuous improvement, it is also a fantastic tool for transparency and accountability, and that brings us to our last principle. No, not to our last principle, exactly. Because banks really are accountable, not just to shareholders, but also to their employees and to society. And genuine transparency will enable them to clearly demonstrate not only their contribution and value to society, but also how well they are positioned to succeed in the future. And so banks commit to be transparent about and accountable for their positive and negative impact, and with that, their contribution to society. They commit, of course, to integrate the relevant information in their annual public reporting. And all this is not just some loose commitment. This framework comes with teeth, and that is interestingly something that was very important to the 28 banks who developed it. Because they felt that this really needed to be a framework that gave credibility that enabled clear signaling for the banks that are part of it, that are the signatories, and that enabled trust with stakeholders, with investors, with society, a framework that really all stakeholders can believe in, can trust in. And so banks that continuously and without reasonable explanation do not fulfill their transparency requirements or do not set their targets in those areas where they have the most significant impact, where the targets are not in line with international goals, and that do fail to make progress, will face removal from the list of signatories, and for that, banks subject themselves to an annual review process. These are the principles. Some of you in the call might think, well, they are quite ambitious, but I can assure you that with a very diverse group of 28 banks from more than 24 countries, having shaped them together, they're really designed for all banks that are genuinely committed to sustainability, no matter their context, if they're from a developing or developed country, no matter their business model. So they can be a retail bank, a universal bank, a development bank, and also no matter their starting point. Because the principles do provide different entry points, and we can get into detail for that later, but there is really a ramp for banks that are coming in and just starting out. They do provide provisions and guidance for banks at all levels. So all banks can come in as long as they're committed to making good progress. Because the more banks that join these principles, the greater the impact that the banking industry can have and will have in supporting society to meet its goals for a sustainable future. And also, the more quickly we will be able to move to a more sustainable banking system. So that means we want you to get involved, and now we can move to the next slide. And there are various channels for you to get involved. We want you to get involved in the consultation, so we want to hear from you. On the next slide, you'll see you can do that via our website. There is a public consultation tool. You'll also find on our website dates for further webinars if you want to share that with colleagues. And also, if you go to the next slide, beyond no, one before that, fantastic. Beyond, giving us your views and inputs, if you say, we really want to support this, we want to be a part of this, then you can become an endorser. You'll find more information on our website, but this is open to both banks and stakeholders. It's, of course, a bit different for both parties. So for banks, becoming an endorser means that you're really supportive of this, and you're planning to sign on to the final principles and to implement this, of course, subject to what the consultation yields as a final package. For stakeholders, this means you're really in support of this, and you would like to use your networks and your individual power and abilities to help promote those principles. So with that, we do hope that you will join us, that you'll join us in transforming banking, and we do very much thank our partners here for the opportunity to speak to you today.
Wonderful.
Sorry, those are some slides I've put in for in case we have questions later, but I wouldn't go through them right now. Yeah.
Wonderful. Thanks a lot, Simone, for this insightful and very detailed explanation of the 6 responsible banking principles. And again, as Simone has mentioned, the consultation is out, and we are inviting everybody here to get proactively engaged. I've already seen some questions coming in, which is fantastic. If you all could hold on for a couple of minutes, we will definitely make sure that we will bring them into the debate. We are actually in the moment starting the interactive Q&A, but before we do that, back to the polls, back to engaging with you. So our next poll question is coming right up. What do you see as the biggest difficulty in adopting the principles in your organization? You have a couple of choices. Number 1, board buy-in. Number 2, company-wide company culture change, or any type of other challenges, or barriers? The poll is up and running now. And the results are in. Interestingly, company-wide company culture change. And I'm sure we're diving into the implications from a strategic, transactional, and operational perspective when it comes to responsible banking with Simone a bit later on. But thank you for sharing your results. In the next instance now, we come to poll question number 3, closely followed by number 2. What do you see as the biggest opportunity in adopting the principles in your organization? So the upside. Number 1, reputational, public, customers or competitors. Number 2, investor relations. Number 3, employee engagement, very important and often overlooked, or any type of other comments and issues or opportunities in this case. Please just use the chat box. Polls are up and running now. And the results are in. Reputational is in the moment the clear favorite. May that be public, customers, competitors. Interestingly, more to come on actually the reputational aspects of signing up to the principles and how you can get engaged again later on in our proactive discussion with Simone and Tony, who can share some best practices. I'm just now opening the second part of today's session, which is the interactive panel discussion. For the next 20 minutes, we'll have here an interactive discussion amongst ourselves and bringing you into the conversation. And I'd like really to kickstart this by handing over to Susanne Katos from Datamaran. Obviously, Datamaran has been looking at key ESG trends and issues, some of the interconnectedness of these issues that I highlighted earlier on in my discussion. They're also literally exploring and assessing the shift that I described from voluntary to regulatory ESG frameworks and taxonomies, most recently here led in the EU by the EU Commission's Sustainable Finance Action Plan and their work, and ultimately the interconnected approach through maybe public and private partnership as actually spearheaded by the Paris Agreement and the SDGs, as we heard from Simone as well earlier today. It's all about the interconnectedness of the issues and increasingly of the sectors and segments coming together when it comes to sustainable investment, finance, insurance, and now also banking. Susanne, can you please give us a bit of an insight of what you see from Datamaran's perspective as the leading ESG developments for the financial services sector overall in 2019?
Yeah, absolutely. Thank you, Martina, and thank you everyone for joining. You know, to your point, Martina, I really appreciated what you said in terms of the ESG movement really evolving with and depending more on technology development. And that was really something that we saw when we developed Datamaran. So for those of you on the call who may not be familiar with Datamaran, just quickly an introduction. Datamaran is the leading non-financial risk management software. It fully automates previously manual processes for benchmarking, materiality analysis, as well as ESG risk assessment. And this is really to offer a more holistic solution for evidence-based decision-making to support how companies integrate ESG issues into their business strategy. Datamaran is used and trusted by companies worldwide across sectors, including banks. And we're honored to be supporting some of the principal's founding banks, including BBVA, ING, and Santander, who use Datamaran to support their non-financial issues business strategy. So with Datamaran, we're pulling evidence and data from a variety of different sources to essentially provide a more comprehensive view of what are the key priority issues for companies based on what we see in the corporate reporting landscape. in the regulatory landscape, which encompasses the soft voluntary frameworks as well as the harder mandatory law, and also what we see in media and social media. So essentially, we triangulate the data to provide a more robust view of what the priority issues for a company or an industry may be. And we most recently were looking at this transition from so-called voluntary regulatory landscape into this more normative compliance-driven framework when it comes to ESG. You know, I think the principles really send a strong signal to not just the banking sector, but all sectors, that non-financial issues really do present real risks and opportunities for business. And it's one of the leading examples, and we're proud to have recently become an endorser for the principles to show our support, because we're impressed by this sector-based initiative, as it really is a market-driven approach that reinforces how companies themselves want to take control over ESG issues. But the principles are just one example. We see that this mainstreaming of non-financial issues is being evidenced by other related developments in the industry. For instance, we talked earlier about the task force on climate-related financial disclosures. More recently, the International Organization for Securities Commissions issued a statement on the disclosure of ESG matters by issuers. We also see the stock exchanges taking a role in this discourse with the World Federation of Exchanges, for instance. And if we move on to, I'm not sure if it's the next slide, but it's a slide that showcases, one back, please. Yeah, so this one, if you can read it, I hope you can. Last year, we had published a Global Insights report to basically look at the rise of ESG regulations. And what you can see here is a sector-specific view where we're looking at the financial services industry. And we're essentially tracking how ESG regulation has risen over the past 3 years, from 2015 to, at the time, 2018. And what we can see here is that ESG-related regulations have grown by more than 100% across the United Kingdom, the United States, as well as in Canada. And if we look at the financial services sector specifically, as we see here on the screen, we're seeing a rise in both sector-specific regulations that focus on environmental topics, for instance, climate change, but also we see a rise in governance and social-related regulations, particularly in the United Kingdom as well as in the United States. If you're interested in learning more about these trends that we've pulled, you can access our Global Insights report. And what you'll be able to see is that there are specific topics that we can really point to within these regulatory developments. For instance, the issue of business ethics is one that we see has become increasingly regulated. And the issue of climate change, as I had mentioned earlier. So again, these are just signals that the ESG regulatory landscape is evolving fast, and it really is changing particularly quickly in the financial services sector. Again, this also will have impact on other sectors, as we mentioned earlier, because obviously banks are also capital lenders and investors. And I think what's interesting to see is that within the center of this discourse in these different regulations is really a focus on how companies actually go about identifying and prioritizing their key issues, which is often referred to as a materiality assessment. So we see that materiality in particular is at the center of this discourse. And that's evidenced in the principles that Simone had walked us through earlier, particularly Principle 1 on alignment, Principle 4 on stakeholders, and Principle 5 on governance and target setting.
Excellent. Thank you very much, Suzanne, for these insights. I think it's time to look a bit more back into the principles. And I just wanted to bring Simone and then Tony into the discussion. First of all, Simone, what are the implications of adopting the new principles from a regulatory perspective and obviously from a business perspective and their impact?
Thank you very much, Martina. I think, well, from a regulatory perspective, the principles haven't been developed in a format that lends itself to be translated directly into regulation. Nevertheless, regulators are looking at them. Some regulators are quite supportive of them. We had an event recently with the Greek Central Bank that encouraged its banks to join. I think more and more regulators, and we see that also with the emergence of the network on greening the financial system, are understanding that their banks will be more stable in their banking systems and less risky if banks really take into account environmental sustainability issues and take a longer term perspective in understanding what changes are coming up and how they need to be positioned for it. So I think from the regulators, the feedback was so far, well, this is good news. We're glad the industry is moving ahead on this. I think most regulators are just really slowly coming into the green finance space. There are a few leaders, but this is still quite new. In terms of business, in terms of banks, well, what are the implications? Look, from our perspective, and I'll let Tony substantiate that. But the implications are, you know, to be better positioned, to have a clearer value proposition towards shareholders, clients, towards society, to be better able to anticipate needs, to anticipate demand, providing solutions first, be better positioned to manage future risks, and very concretely implication in terms of what they'll be required to do. Well, it's really about assessing impacts, about setting targets, about working with clients. Yeah, I think that's from our perspective for regulators and banks, and for businesses in the real economy. I think the message is banks are going to come talk to you about this. And I think, and are going to come encourage you and come work with you and help you to you know, do your own transition to move towards more sustainable technologies and business models.
Fantastic. And then Tony, finally bringing you in, you have actually proactively applied the responsible banking principles. You're one of the founding members of the group, working closely with Simone, and I've read with great interest. I'm very close to the European Banking Federation here, and we had an annual event. The Spanish Banking Federation as a whole has already signed up to the principles, more to come. Tony, what's the role now of that the banking industry, and you're part of this, can play in adopting the 6 responsible banking principles? And maybe as an add-on to this, what's been your experience so far in proactively applying the principles within BBVA?
Yeah, well, thank you very much, and congrats for the initiative to organize this seminar. And well, we believe that the principles are a huge opportunity in the moment that we have today. Today we are totally convinced that, as was mentioned, that banks must be purpose-driven organizations. So the cultural challenge is really a cultural challenge that is very relevant, and we think that we have to reimagine the role of banks in society and how to create a positive impact in people's lives. So the principles are that overarching framework that can help to any bank that is committed in the sustainability journey, to help that bank and to define the strategy, the roadmap, set smart targets. So I think that's the right approach. I would say that the most relevant part of the principles are first this idea of alignment to SDGs and the Paris Agreement, but also is very critical the target setting. As it was explained, this is absolutely unique in the different initiatives we have already in the market, in industry. So this is the most challenging one, but I think it's the right opportunity to have this idea of target setting as a game changer, as it pushed the organization and the leadership of the bank to think in a more long term. And in fact, the longer term frame you have in your decision making, the more relevant sustainability issues become. So this is the next conversation that the principles help to have at the board level, at the C-suite level. So this is absolutely critical, And also adding to this, I think there is also the great idea of the coalition concept. This is something that if we want to mobilize the scale of change we need, we cannot be only a first movers banks promoting the principles. We have to become a real coalition. I think it has been done very well, these 28 banks, but as Simon said, we want to scale our ambition and to be 100 banks in September. So I would say that to any bank that is committed on sustainability journey, and it doesn't matter the level they are or the maturity they are. I think the principles are the initiative to promote sustainability within the banking. So having said that, our experience, well, in fact, we anticipate a little bit the principles when we announced our pledge 2025 in February last year, defining clear targets and a pledge to align our strategy to the Paris Agreement and to SDGs with 3 pillars. So the finance, manage, and engage. We set the target to mobilize 100 billion euros for the next 8 years, but also we set a target defining that we want to progressively align our activity to the Paris Agreement. No, it's a more qualitative target, but it's a target that requires a lot of commitment. No, what's next now? Well, we think that the principles will help us to reinforce the ambition, update these targets, including ones, sure. And it will help us also to see with other banks how we can create more common goals in order to get this scale of mobilization that we need. No? Some lessons learned, if you want to have a few words from a practitioner, practical tips. So we think that we succeed with this pledge and trying to anticipate the principles, thanks to first the strong commitment from the leadership. But also you need to challenge them. No? The second idea or lesson to learn is that you have to use the drivers that are happening outside. So you have to use investors and regulations and regulators, the pressure that is coming to create the sense of urgency that is required to take this ambition. No? The third one, I think it's very useful to define the right framework to connect with the manager's mindset. The writing means that you have to be meaningful, have to be easy to share, with the smart targets, action-oriented, combining opportunities and risk management. So I think the pledge in our case, it helps a lot to mobilize others. Also, you need the sponsors, obviously, internally in the business area and the risk area. And finally, our recommendation is that when you have to define long-term targets, it will take time to make it. So you need months to get the right endorsement internally. And I think that the best way is to start with a big umbrella, with big goals, and then iterate progressively because it's a learning process. So that's the experience that we have about anticipating in a certain way the implementation of the principles.
Thanks a lot, Tony. Very insightful. I mean, Simone, you mentioned a bit earlier, and Tony can probably add to that as well, that there are different levels of entry for banks actually to join the principles. I have 2 questions here. So how does that actually look like? What are these levels of entry and what's the commitment required from a strategic, transactional, operational perspective? And ultimately here, bringing in the questions from the audience now as well, what is the relationship between the principles of responsible banking and, for instance, the Global Alliance for Banking on Values? If you could comment on that maybe as well.
Okay, fantastic. Let's maybe start with the first question. If we still have the slides, there's one slide that shows a little bit the 3 different stages that we've designed for banks to come in. Yeah, that one. So if you look at this, no, we had the other one. Yeah, reporting and review, exactly. So generally, at some point, every bank needs to become an advanced bank and do the full list, right? So really fulfill the transparency requirements, set targets in the areas of most significant impact. So, do an impact assessment, set their targets, clearly link them to international targets and show progress. Having said that, this is quite challenging, and I think Tony can certainly maybe talk about, how much work it was and how long it took to set their own targets. And so banks can self-declare They can self-declare as starter banks. And there it's really, look, they put out their first reporting on the principles. We support them on improving that. And they can remain a starter bank for maximum 24 months. And then they can become an intermediate bank, or they can already just come in as an intermediate bank. And there we expect the transparency to work, and we work together in the target setting process. You know, they come up with first targets, we support them, we advise them, etc. And that's already, you know, that's for another 24 months, and then they need to move towards being an advanced bank. So that's a little bit the ramp we've created, so that banks can choose at which stage they want to come in, and that, you know, there is strong support at every step to move to the next level. So that in terms of the, you know, how banks can come in at different levels. In terms of the relationship, well, I think there's a relationship with the Global Alliance on Banking for Global Alliance on Banking for Values.
Exactly. Yeah.
For banking on values, that way around, GBV, and also with other frameworks. I mean, there are things out there. Our relationship with the Global Alliance, I mean, the Global Alliance is an alliance of banks that, you know, come out of this ethical and sustainable banking space, which are absolute, you know, pioneers and leaders. And we have a strong relationship with the Global Alliance. We have a couple members that are in both. But, you know, the difference is, of course, that we're looking and working more with mainstream banks that haven't been founded, you know, as a bank that very much works towards social objectives. So we exchange with them. They've given us a lot of tips and insights also with regards to the principles process, and are also promoting the principles. So quite a good relationship, but different target group. In terms of what is out there with other frameworks, there are quite a few things at transaction level. The green bonds principles, the IFC performance standards, the new taxonomies that are coming out. Of course, in no way do the principles replace them. On the contrary, those are the things that we recommend banks use. The principles really provide an overarching framework for banks to integrate sustainability at the strategic level, to think about it at a portfolio level, to make sure it's integrated everywhere at the transaction level. But then on the how to do that, I mean, there is a wealth of material out there. There are gold standards, I would say, like the, you know, IFC performance standards for project finance, and we recommend them. So if you really want to dive deeper into the principles, they come with an implementation guidance, and in the implementation guidance, we really refer to all the frameworks and principles and taxonomies that are out there, and, you know, where they can really help banks implement their commitments under the principles.
Fantastic. And obviously for more details, back to you, Simone, after this webinar. I'm sure you're delighted to take one-to-one questions. I'm just now literally coming straight away to the wrap up here. We have 2-3 more minutes left. Suzanne, starting with you, 3 years from now, what impact do you see using assessment tools, as you highlighted earlier, you know, looking at the corporate landscape, but also the wider investment, insurance and banking landscape? What type of impact will the responsible banking principles have on the entire industry? And maybe the others, Simone and Tony, especially when it comes to best practices, what do you think? Will they further encourage best practices when it comes to an integrated sustainability approach at a strategic and operational and transactional level? So just a few closing remarks, please. Suzanne.
Yeah, absolutely. You know, as I had said earlier, I think we endorse the principles mainly because we see this as a very strong signal from companies in the banking industry that they want to take ownership of the processes in-house that they have to really embed sustainability across the enterprise. but also to embed sustainability in other sectors and industries functioning as capital lenders and investors. So 3 years out from now, I do think that we'll see an increase in transparency, absolutely, as you were just speaking to Simone. I think that we will also see a transformation in the way that companies actually look at the way that they go about identifying, prioritizing, and monitoring their key issues. So again, bringing it back to that materiality process. And what we'll see more and more is that non-financial materiality will really start to become integrated with financial materiality. So I do anticipate that we'll also start to see some of these issues being referenced not just within standalone sustainability reports, but also financial filings and regulatory filings as well.
Thanks a lot, Suzanne. Tony, from your perspective, obviously now already looking at applying best practices, entering the threshold, advancing at all levels. Where do you see the role of BBVA and the wider principles and their impact for the banking industry in the next 3 to 5 years?
Well, principles for us is not only nice words, it's clearly smart targets, and it's clearly verifiable facts. So that's great. It's a great framework. We invite everyone to join. And in 3 years' time, we see from one side, we see a huge development on solutions, on sustainable solutions, not only on the wholesale market, but also on the retail market. So that's critical. And also on the other side, we see in 3 years' time, a more developed methodologies and standards to integrate social and environmental issues into risk frameworks within the banks.
Thanks a lot, Tony. We're looking forward to see more best practice from BBVA in this context. Thanks a lot. And Simone, last but not least, obviously your perspective on the next 3 to 5 years. And I'm bringing in the last question here I've just seen on screen. There is currently an underrepresentation when it comes to US banks. Are you aiming to close that gap, and how?
Well, the U.S. is underrepresented. It is a market where banks find it very challenging in the current political climate to come out very strongly in favor of frameworks that support and commit them towards the Paris Climate Agreement. But we are working on it. It doesn't mean that we don't need support. So please, if you come across American banks, tell them they need to join. 3 to 5 years from now, I think we will see, hopefully in all key markets around the world, a critical mass of banks that see themselves in the service of society, that clearly show how they're planning to contribute to society, and that can already some first results and increased impact.
Wonderful. With that, I leave it to all of you to follow up one-to-one with, obviously, hopefully, a lot of more questions, details, commitment and involvement. Here again with the Network for Sustainable Financial Markets, we hope to become endorsers very soon. Our initiative is also currently shaping its purpose around the next generation and millennials. And they clearly mandate as well a new perspective on the investment, insurance and banking industry, not only as employees, but also maybe as savers, investors and the likes. So much more to come. I would really like to thank all of today's fantastic speakers, Simone, Tony, Suzanne, and thank you very much for being such an interactive audience. There have been many more questions coming in. Again, we encourage you to follow up one-to-one with the marketing team at Datamaran, and they will forward your questions. So that's it today from our end. Thank you, and see you very soon.
Thank you.
Thank you very much.